Half an hour from the opens in Hong Kong, Shenzhen, and Shanghai. You're watching the China Show. I'm Yvonne Man with David and Glenn.
Good morning. Let's get to your top stories today. Samsung surging to a fresh record after reporting its biggest quarterly profit in more than 3 years. That's thanks to growing AI demand for its memory chips.
Japanese stocks falling after the holiday as a political crisis brews, even as global equities reflect renewed optimism about U.S.-China trade talks.
Yeah, and speaking of here, U.S. Treasury Secretary Scott Bennett says he still expects a Trump-Xi meeting despite China's move to tighten rare earth exports. We'll get to Beijing's perspective from a think tank backed by the Commerce Ministry.
And we're live in Hangzhou to speak with Chinese makeup brand Florasis about their global expansion plans.
Good morning. Welcome to the program. Lots to get through the next 2 hours or so. We're starting things off with a look at equities, precious metals, and the dollar, which right now is consolidating on the greenback, on the gauge at least here. The precious metal space continues to give, with silver, in fact, hitting a fresh record this morning. We'll talk more about what this really means under the hood in terms of cross-asset allocation. Asia Pacific, the benchmark, will make sense to you in a couple of minutes, in a couple of seconds here, because on the benchmark basis, we're flat. Most tech stocks are actually on the way up, but you have this Nikkei, flip the page please, reopening today that's actually providing the counterweight there. The TAIEX index is coming online, of course, is 1.8%. You have the Shanghai story as it pertains to the NVIDIA collaboration. There's the Kospi index, and we talked about Samsung following a massive move, of course, in shares yesterday. So I think we cleared the estimates on the consensus by nearly 2.5 trillion won. These are, of course, the prelim numbers. Still, on the Japan story itself, of course, it's very fluid, not just on the markets, but within that, of course, as it pertains to the political side of things. Dollar-yen near the stronger side of 152 to 153, but certainly still near the very weak end of the recent range there. Euro-yen on your screens, and as we can see, of course, that catch-down trade we're seeing in the equity complex in Japan. Now, it's certainly 24 hours makes a very big deal, big difference, of course, on the equity market side. Buy the dip, they did. Although when you look at volumes overnight, not quite as strong, at least as far as the Chinese listings were concerned. On price, though, as you can see, we are expecting to see the rally continue here in the Asia Pacific. We have a 20-year bond auction today. We'll keep an eye on that. The fix, of course, was still fairly a big market event yesterday, and as it pertains to futures, we are called higher going into the open, 27 minutes away.
Yeah, it seems like this recovery could be underway here. All it took was maybe one tweet or one statement from President Trump here to kind of bring down the temperature that we saw yesterday. So certainly we'll see how, if we see that recovery and rebound in Chinese markets here today. In terms of what to look out for, southbound flows, as you see there, hit the highest in 2 months yesterday. We'll see if that continues for another day. When you talk about other blockbuster deals, certainly InnoScience is one, also working with NVIDIA now when it comes to building up the architecture when it comes to AI, the like. We're focusing on Xiaomi. There was this crash that happened with its EV car. We'll talk a little bit more about what happened there as well. We see silver at all-time highs. So watching, of course, some of those stocks here today. There is a CGB sale here around the 20-year bond. And, of course, we're watching this briefing from the Chief Executive, John Lee.
Yeah, that takes place, I believe, this hour. But let's get to our top story here. Across the tech space, a lot of big earnings, a lot of big deals to tell you about. We'll start things off here with Samsung and the prelim numbers reporting the biggest quarterly profit here in more than 3 years. Shares gapped higher, and then at that point, since about an hour back, we've since retraced most, if not all. As you can see, those gains were down a third of 1%. Just for context, at 94,000, the share price has near doubled basically from the bottom of last year. So suffice to say, the shares have done very well. Let's bring in Masahiro Wakasugi here out of Tokyo, our Bloomberg Intelligence senior industry analyst here. So, Masa, I mean, these are prelim numbers, so we don't really have a lot of details in terms of the granular breakdown across the businesses. But what is your initial take here, initial read from these results?
Good morning. Yes, if we look at the numbers, for example, operating profit increased quite strongly, and Q1, Q2 operating profit was ranging around 6.7 trillion or maybe 4.7, and Q3 number 12.1 trillion won. So that's a quite strong number recovery, and almost 2.6 times as much as the Q2 operating profit. So I think that we can estimate that both volume and also pricing for the semiconductor, especially memory business, should be improving. So that's a good sign for the company, including for the Q4 operating situation. So I think that the Samsung should be also benefiting from the not only the HBM but also the conventional DRAM and also probably NAND flash memory business. And probably I think that the Q2 or Q1 numbers were dragged by the foundry business. So I think we would like to see how the foundry business is also recovering for Samsung.
And does it have any other implications to some of the other tech names as well, Masa?
Yes, of course, probably a market will focus on SK Hynix because the recovery should be quite strong for Samsung. So I think we can expect the SK Hynix our operating profit to increase maybe in September quarter. And that's also based on the Micron's recent results. And if we look at maybe NAND flash pricing, and recently we are seeing the nice improvement in the NAND flash memory pricing. So that should be a good sign for the likes maybe Kioxia in Japan. They are making a NAND flash memory as well as solid state drive. And maybe if we look into next year's situation, some memory makers could expand production capacity, especially for the HBM, and also maybe the upgrade investment for the NAND flash memory. In that case, semiconductor equipment companies, including Tokyo Electron or Advantest, or maybe Screen Holdings, Kokusai Electric, these companies may see some demand pickup for the investment in the memory space.
All right, Masa, thank you. Our Bloomberg Intelligence senior industry analyst Masahiro Wakasugi joining us from Tokyo. So you have the Samsung story, you have all these tech partnerships, certainly is the reason maybe why we are seeing this risk rally. But we are getting some breaking lines here from Beijing when it comes to the Commerce Department. Now, they're talking about these recent U.S. tariffs. So they're issuing that official statement now. They are defending the rare earth export control measures and saying that they are lawful, and they're urging the U.S. to correct wrongdoings. They say the export controls do not prohibit exports. They're not a ban. They reiterated that. But they are hoping with the U.S. and they're urging the Trump administration to manage differences through the dialogue. What else are you seeing, Dave, so far?
Yeah, and I think this is a key level. I think this is a key nuance here that, to your point that you just made there, that export controls do not prohibit exports, right? And I think we're going to get more clarity on this as well at the bottom of the hour, because we have, of course, someone from a think tank underneath the Ministry of Commerce joining us as well. The other thing here that seems to be a key message is that because we are looking at working level trade talks, and that U.S.-China cooperation are benefiting both sides, it does seem we are still on track to have those talks, and of course, those conversations go. Dollar China on your screens, and yeah, we'll talk more about this with Zhou Mi, of course, will be joining us at the bottom of this hour. But let's bring in John Liu, our Greater China Senior Executive Editor here, for more on the story and really how this sets us up for this meeting, hopefully, that looks to be taking place still in about 2 weeks.
I mean, if you look at that rhetoric, it would suggest that a meeting will happen and that both sides want to talk. And so, I mean, the big question now is, are the rare earths controls, are the additional 100% tariffs, is that posturing by both sides to get a better deal? Or is that some sign that this relationship is falling apart, unraveling?
Yeah.
That seems to suggest that everybody wants a deal, and this is posturing. I think we also get that, we seem to get that signal from Secretary Bessent overnight.
Yeah.
And the other thing with this, the emphasizing that controls are not a ban, I think is also, Secretary Bessent raised this idea of working with other Western countries to respond to China's rare earth controls. And so I do think there is an aspect of China trying to calibrate the message, thinking that it is both talking to the United States, but also conscious of what it means for others. Europe.
Or the collateral damage that could ensue. Okay. Yeah, it's interesting. So you think that maybe this meeting will still happen, but did you get a sense of what a trade deal might actually look like now? I mean, it seems like it's both sides are willing to dig in and maybe double down.
Use their cards.
Use their cards very, usefully, I guess, right now. But what would a trade deal actually look like at this point?
So I think if China were to be very aggressive with these rare earth controls and the U.S. did put in 100% tariffs and stopped all software exports to China, that would be calamitous for the global economy. And so I don't think that will happen. I don't think either side wants that to happen. I think most likely the outcome of this meeting is some agreement to forestall these things coming into place, because the deadline for them to start both the rare earth controls is like early November, and it's November 1st for the tariffs. So I think most likely what we get is just kicking the can down the road. I think markets are worried that there could be a worse outcome. I think there's also the possibility there could be a wider agreement, because we do know that the U.S. President Trump has talked about soybeans. He's talked about Boeing airplanes. China, we know, wants the U.S. to change the rhetoric that it uses around Taiwan to say it opposes Taiwanese independence as instead of saying it does not support. And so that would be a big political win for China. So those are some of the things I think are on the table. Whether or not we'll actually get these out of APEC, I think, is relatively unlikely.
Yeah, and I mean, just a note on Secretary Bessent, and to your point, markets initially sold off, and then right now we're looking at a relief rally, and hopefully that lasts, right? Secretary Bessent also mentioned there was substantial communication between Friday and Monday, which to me speaks to, and my question to you would be, how much of this was simply just misunderstanding over intention and details?
I think there's definitely a mismatch in terms of intention. If you talk to either side, both sides will say we had to do this because the other guy did something to us, and we're just responding to provocation. I think that Secretary Bessent talked about communications over the weekend. There's a Chinese delegation in Washington, D.C. for the IMF meetings. They will have working level talks. Secretary Bessent talked about coming to Asia for talks with the Vice Premier, He Lifeng. And so I think there is a scramble to get everybody's ducks in a line ahead of the Trump-Xi meeting. So I think there is a real motivation to get something done so that none of the bad things that we've been talking about actually happens.
John, fantastic. Thank you so much. John Leo there, of course, with the latest and the take there on the context, given the latest headlines coming through. Just counting down to the open of trade here, it is just, 17 minutes away in Shanghai, Shenzhen, and here in Hong Kong. Futures, last we checked, should still be pointing to a higher open today. This is the China Show.
We're just kind of tracking and recapping some of these lines coming through from the Ministry of Commerce in China here, issuing that statement when it came to the U.S. tariffs and the like, and really defending their rare earth export control measures as well. But as John Liu mentioned before, right, when you get the tone and the rhetoric around this latest statement, it seems like both sides are still willing to talk, right? They want to hold work level talks. They did hold level talks yesterday, and they did talk about cooperation benefits both sides. So at least trying to show some sincerity. They want the U.S. to do that for talks as well, and telling the U.S. to stop threats while seeking those talks. So overall, that should help the mood music here today. You take a look at how futures, they are punching a little bit higher in China, so we're up about 1/3 of 1%. Could bode well and add to the sort of recovery that we've seen overnight. Yeah,
I mean, there is some momentum to play going into the open today. No rhyme intended there, by the way. Bennett is with us, Asia Head of Investment Strategy at L&G. The company, of course, asset management business invests across public and also private markets worldwide. AUM, 1.5 trillion. Ooh, U.S. dollars. That's a mountain of cash there. How are you thinking about this fourth quarter now? Like in terms of all things considered, the risks that suddenly we're talking about this week with trade, but AI seems to be giving us reasons to ignore the former.
There's so much stuff to worry about, isn't there? From what's going on with China, from the Japanese election, France, chaos there as well. But I think ultimately
Same
you're
guy
right.
though again.
For now. But ultimately, I think you're right. The AI trade is still the one that's pushing markets higher. And we're going to get the earnings season, aren't we, in the next few days? And that's always a nice reflection on how actually corporate America, the world is doing, and they're doing pretty well. So I think, yeah, we're still reasonably bullish going into the fourth quarter. I think markets can still do pretty well.
We were just talking about this whole debasement trade, where you're starting to see investors really look at these sort of, traditional havens, or at least things like sovereign debt and currencies, and really thinking like, look, I'm going to replace it with something like Bitcoin and gold, which just continues to do quite well. Is this something of a momentum sort of trade you see, or is this actually a real shift?
Yeah, no, I think it is. It's an erosion rather than a shift. I think before COVID, the US Treasuries were always the risk-free asset. You could hold those and hedge your equities because you knew that your bonds would give you insurance, I guess. And that's no longer the case with inflation where it is. And inflation, I think, is going to stay sticky. If inflation's sticky, if you're seeing politicization of the Federal Reserve, if you're seeing tariffs, then you don't want to be holding government bonds, and you've got to find something else. What is it? Well, gold is obviously the winner this year. It's up 50%. So I'm a little nervous about valuations, but clearly, even what we saw on Friday with a little bit of a downdraft in the S&P 500, you saw gold going up, didn't you? So I think it still works as that safe haven asset.
Are we moving into a world where we simply need less allocations to bonds then? Because I mean, that needs to add up to 100, right? If equity markets are doing well, and there seems to be a structural shift to replace bonds as a hedge somewhat, what gives?
Well, the price of bonds or the price of the currency gives, because they're still issuing the bonds, so someone's got to buy them, and it's just what price level you are prepared to buy them, and that's why yields are pretty elevated. I still think US Treasuries, long-dated US Treasuries, yields could go higher. I don't know where fair value is for US Treasuries. If they're going to keep pumping them out, they need people to buy them, and we've got to decide what the right price is. The interesting thing, of course, the Federal Reserve, the Treasury, could decide to shift the issuance down into the shorter end. So they could say, I don't want to issue long-dated bonds at these elevated yields. I could issue shorter-dated. That's fine, but then the currency takes the pressure. And the dollar, we've already seen down 10% this year. That could fall even further next year if that's what they do. And again, that comes back to gold, doesn't it? It sounds silly just reiterating that gold is the asset class. But that's why it's up 50%.
Relatively speaking, though, you prefer actually bond markets in the UK, Japan, even France, despite what we're seeing in those governments.
It's valuations, right? So the US Treasury yield curve is steep, but I think that's warranted. That's justified by what we've seen. But it's led to other curves in the world, the UK curve, the Japanese curve, also steep. By more, actually. In Japan, it's incredibly steep.
Right.
Forward yields in Japan are suggesting that rates are going to accelerate over the next 20, 30 years. Who knows what happens in the next 20, 30 years, but that's what it's saying. I think that's too much. And we've been putting trades on curve flatteners in the UK and in Japan, taking advantage of those really steep curves and hoping that they go down. France is a different point, though. France is politically a bit of a mess right now. Of course it is. But where French government bond yields trade, 80 basis points, 10-year level over German government bonds, and that's not that bad, right? That's where European investment-grade credit trades. So what would you prefer to have, French government risk or European investment-grade risk? That's a question.
Well, you look at yields. I mean, people prefer Greece now, I think, just to look at the valuation there. Talk to us about Japan, then, because is that, you say you're betting on a flatter curve. Is that simply a tactical trade? Because when you look at the longer-term implication on equity market, people seem to suggest that is indicative of a bull market that is just beginning in Japan.
Yeah, no, I understand why the curve has steepened. I'm just questioning how much it's steepened. So that's all I'm saying. And also, I would suggest that countries like Japan and the UK is a good example that you can have pressure on governments in order to try and get those curves under control. And I could see the same in Japan. I mean, we're already seeing the negotiations, aren't we, between Takaichi, the LDP and other parties trying to find a coalition. Part of that negotiation is potentially watering down some of the more aggressive policies. Right. If that happens, I could see the curve flattening on that basis.
We've been following a lot of bull markets. I mean, China certainly is one of them. How are you as a foreign investor looking at this market? And given that we have seen, this fits and starts and tit for tat, really does quickly kind of sap sentiment by just one sort of post from the president. How should I be looking at this sort of bull run?
So China has been a winner on the tariff war so far this year. If you just look at equity markets, it's up significantly. The Hang Seng up 30% or so this year. But I think that's more a reflection of cheaper valuations at the start of the year rather than an outright, we're going to do really well as China Inc. It's still, for me, a difficult situation in China. The economy, I still think actually for next year, the focus is going to be on the 5-year plan rather than necessarily corporate profitability. So I don't think we're going to see another 30% in China equities next year. In fact, I would be pushing against that. I'll be selling into strength in China. But that's not to do with the negotiations. That's just because of valuations. Again, they've done really, really well. And everyone's bullish on China. This time last year, everyone was bearish on China. And that's the flip of the switch, I think, which is important.
It's a reset. I mean, we've reverted simply to the mean. So I wonder really how people feel about this market because it's not that cheap anymore. Is there anything on the earnings story that you think might give you, might merit a second look? Or is the second look still US AI and US tech?
Yeah, well, actually, that's where all the earnings are. So the S&P 500, for example, in the US, you're looking at 10% earnings, maybe Q3 versus last year's Q3, which is great. But that's driven by AI. That's driven by technology. They're up 20, 30%. And I think with China, it showed me the money time. The equity's up 30%, but earnings aren't that good. The focus has never been on earnings on China. So I want to see those earnings. I want to see, actually, if that turns into something that I can hang my hat on next year and see the equity market go up because of earnings rather than just multiple expansion.
Ben, fantastic. Thank you so much. We covered everything there. Ben Bennett there, Asia Head of Investment Strategy at L&G. Okay, just about under 7 minutes to the opening bell. Hang Seng's looking like this, approaching the open. And we are going to see a bounce going into the Tuesday session. Plenty more ahead. This is the China Show. Okay, what a difference 24 hours makes. Certainly a lot, a complete about-face in the texture and complexion of these markets. From this time yesterday, massive rally overnight, not a lot of volumes though across the U.S. markets. In terms of what we're looking at today, apart from price, obviously southbound flows, which hit the highs in 2 months yesterday, 20 billion Hong Kong dollars. So the question mark yesterday was answered pretty much on the same day. Would you buy this dip? And they did come and buy that dip substantially. Yeah,
it seems like it wasn't much of a question at this point, just given where we have seen sentiment, right? We the U.S. seems to be open still for some sort of trade deal. And we just heard from the Ministry of Commerce from China. Seems like the ball is in each other's court is how they're kind of presenting it here right now. Analyst actions are like this. SMIC A shares rated new add at Western Securities there. Price target of 146.45. UB Tech Robotics also 8 shares rated a new add at Haitong Securities. And we have Jiangsu Hengrui also rated a new hold at Daiwa. In terms of what to watch, it is those local chip makers, the like that we're watching here today as well. InnoScience as well after that deal with NVIDIA. We're up 15%. The open is next.
Good Tuesday morning from Hong Kong. A question I've been grappling with in my head is what's longer, this bull market or summer? Because it's still been extremely hot outside. You look at the bull market and the bounce we're seeing also suggests the extension of this bull market, and we are called higher as we approach the opening.
Hey, we'll take it, right? But you know what? I like fall in Hong Kong, so certainly cooler temperatures are certainly needed, but we don't need that. I guess maybe cooler temperatures we do need that when it comes to the
cooler
music in the U.S. and China trade discussion. And we're seeing that here from both sides, right? We're talking about this Ministry of Commerce statement that just came through in just the last couple of minutes, and it did sort of echo what we heard from the U.S., right? There is this sort of wanting of the two sides to continue talks here and that they want this cooperation there. So there you go. You take a look at how this is, and then you are seeing a recovery underway after we did see a bit of downside there yesterday, and onshore markets were up about 1% for the CSI 300. We talked about, certainly the buy the dip mentality is very much there here today. We saw that overnight in the U.S. and some of the ETFs as well. And CATL 8 shares, and you see some of these big cap names are doing very well here today. Kueichou's up some 1%. Capricorn as well is catching a slight bid this morning. We're watching in terms of metal space. Silver is certainly one to watch here, hitting an all-time high. We'll continue to watch that one as well. But here's how the Hong Kong side is looking, because what we were focusing yesterday was the southbound flows, and we certainly saw that highest in 2 months when it came to the net buying that we saw. So it looks like that could continue for another day. We'll see. And it looks like they're scooping up HS Tech. There you go. You see the likes of Alibaba up 1.5% as well, doing quite well. Baidu is as well. We're watching Xiaomi closely here, given we saw that crash involving its EV cars. We'll flesh that out a little bit later on. But today, it seems like it is a broad sort of recovery that we are seeing across these markets. And it is because of what we saw, right? So in terms of the rhetoric from the U.S. and China, that's also improved. You think about all these tech cooperations, whether it's Broadcom and OpenAI, whether it's Hanhai and NVIDIA. And Innoscience, this is one chip maker as well, talking about this collaboration with NVIDIA. And you see the shares just surging in Hong Kong. We're up 16% here right now. That's lifting a lot of the chip space as well. SMIC is up 1% here. And we're watching these rare earth stocks, right? Because China did also defend those controls when it came to rare earths as well. Looks like we're seeing a mixed picture here today. Dave?
Yeah, in fact, just on that clarity that we did get officially from the Chinese side, in fact, that statement dropping within the last half hour. So let me just recap some of the headlines we got out of the Commerce Ministry here. Well, for one, export controls do not prohibit exports. It's point number one. That these rare earth export controls are lawful. That's according to Chinese officials. They are defending, of course, these control measures. They are urging the U.S. to correct its wrongdoings, and they're hopeful for the U.S. to show sincerity as we approach those talks, which by all indications suggest will still be taking place in about 2 weeks' time.
Yep. Joining us now is Zhou from Qingdao, senior researcher at the Chinese Academy of International Trade and Economic Cooperation. That is a think tank under the Ministry of Commerce. Zhou, thank you so much for joining us. Let's start with that statement from the Ministry of Commerce. It seems like there is still some, cooperation that the Chinese still want leading up to, of course, this APEC meeting. Do you think that this meeting will still, first and foremost, take place?
I don't think that there are a lot of obstacles for both leaders to meet with each other if we are able to reach some of the concerns. I don't think that is a preconditions for the following occasions to happen. But I personally, I'm not involved in this kind of businesses of the meetings arrangement by the two countries. But I would say that the mechanism between the two countries, the governments, to talk about the trade are still there. We continue to discuss about the possibilities and also what we want to have in the coming future about the different issues, including some of this misunderstanding and also some new mechanism or institutional arrangements. I think it's likely, we are going to continue with that because the market is waiting for us to make more clearance about what we really want to have.
Yeah, Zhou, David here. Since you mentioned misunderstanding, I want to get your opinion on what you think was the biggest misunderstanding.
I think that, as you mentioned just now, that some people think that China do not want to export our rare earth products, and I don't think that is the truth because we still are, encouraging the companies to follow the market rules and trying to do the businesses with other trading partners. I know that China's rare earth industry is very strong, but it's not only because of our domestic market. We depend a lot on the global market, but the global market is based on some rules and certainty. So if we are continue to support the government, the government to support the enterprises in different ways to trying to give them more confidence, I think that the supply chains can be strengthened. But we have to say that, there are some kind of misunderstanding about China's practices is trying to stop the export to United States. I don't think that is the truth. We are trying to fulfill our commitments in the laws of the export control. That is a system that we want to safeguard our national security and also trying to contribute to the world peace.
Can you tell us on how the enforcement side of these export curbs, Zhou? I'm just wondering because does China have the capacity? What tools does it have to really kind of, check these, products containing traces of certain rare earths to be effectively implemented beyond its borders? This whole long-arm jurisdiction side of things, does it have the capacity to do so?
Yes, it is a very good question because, when we are trying to start a new mechanism or regulations, I think that we still need some time to observe the procedures. First of all, we need to publish the kind of instructions on the businesses who really want to have the export, from China about rare earths. I think that we are setting up some mechanism to coordinate different ministries and also the regulations parties, and also trying to give them very clear signals about what they are required to provide the information to the related ministries. I think it's a first step. We are going to strengthen the abilities, not just by the company side. We are also trying to improve our own abilities in dealing with such a kind of difficult and very complicated situation. So in the meanwhile, I think it's worthwhile for a lot of more communications and discussions between the governments. If the governments are able to have a more channel of communications, that will shorten the time for the people, for the companies to adapt to the new regulations.
Yeah, and I think you make a very good point that the U.S. should not identify itself as a target of these controls. This is something that China is looking to do with all its markets and all its trading partners. And I'm curious, improving the communication lines between, the Ministry of Commerce, let's say, Chinese officials and its trading partners. There was a lot of misunderstanding when the news broke last week. In fact, I remember during the shows this time last week that we had to figure out what was happening. And I wonder whether China communicated what was announced last week with other trading partners ahead of that announcement.
Well, I'm not quite sure about the communications between different countries, but I would believe that the public announcement is a very official one, that we state out what we are going to do in such a time. I think all these procedures are following our suit by the government and the related laws and the regulations. And to do with rare earth, I think we are having more discussion about the target. I don't think that China want to export or control our export to the U.S. But on the other side, we are seeing that the United States is trying to put more Chinese companies in the so-called entity list, and that really are putting so many Chinese companies in the danger. I didn't hear any of these messages from the U.S. side before they are putting Chinese companies in that list. So I think that is also natural for China to do the similar things. We are trying to safeguard our own national security. We don't have to require the opinions from the other side. If it's just following the practice of the international communities, we are not just trying to do something unilaterally. I think it's a practice is to follow our law requirements.
You mentioned a little bit more about, maybe limiting the collateral damage, that you still want to ensure that global supply chains are still intact. There is, after the controls that were set in April, there was a narrative out there that China might be disrupting global supply chains, and that it is looking to be China is an unreliable supplier in some ways. How do you think China is responding to that? Are they better prepared this time around to process these applications?
Well, if you're looking at data, yesterday China published the data of the September international trade and the first 3 quarters. In the coming and continuously 3 quarters, China's export to other countries are keeping on the trend of increasing. I think that proved a very important fact that all the many trading partners of China are still trying to count on the China's export. I think it's really a good proof that we are able to provide a better support to other countries. So for the supply chain, in my understanding, China is the #1 country for the international trade. We will not want to put us in the very dangerous position of interrupt that and disrupt that. So for us, the best benefit for us is to give the market more confidence and more sustainability. I think that is what we really want to have. So even to the rare earth, I think that China is the largest stakeholder of that, but we are not just the producer of the raw materials. We're still having so many manufacturers. They are demanding a lot of more demand of this rare earth products. So that means that we are able to coordinate with our trading partners and make a better balance based on the the demand and the supply.
Joby, a final question before we let you go, and thank you so much, by the way, for being patient with us. Do you think a grand trade deal is still achievable? Are you optimistic that we can see one from both sides in 2 weeks? And apart from rare earths, what other sticking points do you think still remain on the table?
Well, it is always the same with China side, that we think that the relation between China and United States are mutual beneficial. We should respect each other, and these relations are benefiting both sides, not just the government, but also the market and the prices. So if United States still able or still want to do that, I think it's possible and most likely to happen in the future, that we can reach some consensus on the practices and trying to give the markets more confidence. So for us, I think the most important thing that the other side should not just trying to abandon what they have promises. So they have to keep their words, and they have to moving forward to trying to reduce the more interference with the relation between us. And that is very important for us to build the trust-based relations between our two countries.
Zhou Mi, thank you so much for joining us. Senior researcher at Chinese Academy of International Trade and Economic Cooperation, joining us out of Qingdao this morning. Coming up after Tesla, Xiaomi's EV door handles are under scrutiny following a deadly crash in China. We have the details coming up next. This is Bloomberg. Some big stories that we're tracking for you this morning. The Dutch government has seized control of Chinese-owned chipmaker Nexperia, invoking a Cold War-era law for the first time. Officials cited serious governance shortcomings at the firm that they say threaten key technological know-how. The move, targeting a unit of China's wing tech technology, is expected to escalate trade tensions with Beijing. Airbus is opening new assembly lines in Alabama and China to boost output of its best-selling A320neo jets. Engine issues have forced the company to build gliders or planes completed without engines. Airbus aims to build 75 aircraft a month by 2027 as it works through a backlog of more than 7,000 orders. And Bloomberg's been told China Renaissance is seeking to raise $600 million for a U.S.-listed vehicle investing in BNB, the cryptocurrency linked to Binance. Now, sources say the deal includes $2 million from YZ Labs, a family office of Binance co-founder Changpeng Zhou. Now, China Renaissance said in an August filing that it would invest about $100 million in BNB.
Let's check in on shares of Xiaomi. Yesterday saw some pretty heavy selling and quite a drop in the share price. We are seeing it trade flats in the opening, 15 minutes or so. Now, the news here is it certainly comes after this deadly crash involving its SU7 electric sedan on Monday, and certainly renewing concerns over electrically powered car door handles. Bystanders were actually unable to open the doors and rescue the driver before the vehicle then burst into flames. Let's bring in Linda Liu, our Asia transport reporter, joining us right now to just help us understand the big picture context here. And Linda, why do accidents like this keep happening? Is it because we're looking? It's not just with the EVs, of course, the Xiaomi, but also when you look at certainly Teslas, for example.
Yes, so these accidents are actually not that rare because we've seen reports of this happening in the US and China with Xiaomi. This is probably their second accident following the one that happened in March in similar circumstances where the car crashed and also burst into flames. The key issue here is the design of these EV door handles. While they look very sleek, they're very good for aerodynamics, they're not very easy to open in some of these emergencies because they are electronically powered. That means when the car gets into a crash or some sort of other accident, once they lose power, it could be very hard to open these doors. Now, there are manual releases for these door handles, but they're usually inside, and their placement may vary across models. So people not familiar with the cars they're traveling in may not be able to find these manual releases. And certainly for first responders, it's not very accessible to open these doors manually from the outside.
Yeah, it's certainly quite alarming just hearing that. Linda, you know, the U.S. has opened an investigation into the design of some of these door handles, right, when it comes to some of these Tesla models. And this is, of course, after our reporting. Are Chinese authorities doing anything like this?
Yes, so Chinese authorities actually started drafting new regulations, considering drafting new regulations after the previous Xiaomi accident that happened in March. So right now, the authorities have put out some draft rules. They are seeking public feedback. And the key, a key new requirement is for manual releases to be available not just inside of the car, but also outside of the car in case of emergencies. So with these new rules, taking public feedback right now, you can see the Chinese government is actually thinking about passenger safety, and especially in cases of accidents. You know, they're really requiring car makers to make sure the designs are intuitive and also make it possible so that even in the event of an EV losing power, these doors may be able to be opened from the outside.
Linda, thank you, Linda Liu there, our Asia transport reporter joining us there. We got plenty more ahead. This is Bloomberg. President Trump is urging world leaders to ensure the U.S. brokered truce between Israel and Hamas turns into lasting peace. At a summit on Gaza's future, Trump said efforts to fund the Strip's reconstruction have already begun.
Pleased to announce that numerous countries of great wealth and power and dignity have come forward to me just today and over the last week to say they want to help in the reconstruction of Gaza, putting up whatever money is necessary. And the money is, of course, it's a lot of money, but it's not much compared to the value or the wealth of these tremendous countries.
Let's bring in our Bloomberg News desk editor, Balazs Pence, now joining us on, you know, obviously there is this sort of notion that, you know, Trump wants to say that this is over, essentially the war. But how do we know that whether the ceasefire is going to lead to lasting peace?
That is the big question, isn't it? I mean, we know the president has a flair for the rhetoric and likes these rhetorical flourishes. But within that, as we heard him talk about it, there's the question about what happens next. And there's a recognition that very thorny, very difficult issues remain. Just looking at the specifics of Gaza and the situation there, we don't know if Hamas is going to disarm. We don't know when Israel will fully pull back from the Gazan territories. We don't know who's going to govern Gaza, and we don't know, as the president said, who will pay for the reconstruction. So there's a lot happening that still needs to be resolved. But I think there's a recognition that the president can use the might of the U.S. presidency, what Teddy Roosevelt used to call the bully pulpit, to build on this momentum and get people together. He had a huge audience, lots of world leaders in attendance, and he's hoping that he can bring them together and keep that momentum going. The Egyptians are trying to pull together a summit on the reconstruction for next month. So there's a hope that there will be a continuation of this effort.
Did the president discuss or comment on whether one or two state solution and where he's perhaps leaning in that regard?
Well, so that is one of the thorny questions that remains. We don't know what will happen with the Palestinian state. We don't know who will govern Gaza. Like I mentioned, we don't know what happens on the West Bank either, where there have been tensions building up during this 2-year war as well.
That's right.
So there is a lot that's still to be determined. And when we look at the broader picture of the Middle East, all those intricate and very delicate relationships, there's a lot still to be worked out. As you said, the question of the Palestinian state is certainly one of the most important ones.
Balazs, thank you so much. Balazs Pence there our Bloomberg News Desk editor, with the latest. And really, the piece allows us to sort of consolidate our positioning. But yeah, there's lots of big questions remain. Certainly is an understatement. Very briefly, we're about just over 20 minutes into the cash market session here. So one of the sectors we have been tracking, in fact, since yesterday, following, of course, we now have better understanding in terms of spending and visitor numbers and volumes into Macau during the holiday break, and some commentary coming from analysts too. So we had declines yesterday, declines overnight, and still declines against the grain of this relative calm across these markets today, and we are continuing to track this, of course, going into the thick of the session.
Yeah, I think Jeffrey's had an interesting call saying that the Golden Week holiday, was not as good as expected, right? I mean, take a look at how gaming revenue looked like here, which did include that period, right? And they also noted that the typhoon probably had an impact on results, really highlighting the low visibility in Macau, which has been ever present, they say. So that certainly is one disappointment that we're seeing across the Macau casinos here today. But you take a look at how the silver stocks are doing. I mean, all-time highs, right? There was that squeeze that we saw
in London.
In London, too. So that certainly is helping some of these silver miners out there, like, China Silver Group's up some 7-8% here right now. And it looks like right now we continue to see those gains in silver spot prices, too. But you take a look at how the rest of the benchmarks are doing, and it looks like we are seeing a decent recovery here in Hong Kong, in the CSI 300, though Japan bucking that trend today.
Yeah, it is bucking the trend. It is reopening today, but it's also coming off the lowest of the session.
Yeah.
So it's starting to join in terms of market direction. Onshore markets are actually outperforming today, which I think is something given how tight the AH premiums become, and a lot of more people have been leaning towards A shares. We'll talk about that later on. The AI trade continues to give, with Taiwan up about 2%. Plenty more our way.
Welcome back to the China Show. A look at the CSI 300 a half hour into the session. And yes, we are seeing onshore actually outperform here this morning. We're up 0.7%. You compare that to what we're seeing in Hong Kong, and we're seeing, relatively speaking, not as punchy gains, excuse me, but there has been some improvements, right? When we heard from the Ministry of Commerce and the Chinese side talking about they still are seeking some sort of cooperation with the U.S., that these export curbs when it comes to rare earths, and really reiterating that they are not bans and they are seeking to work with, of course, their partners overall. And then you have all these sort of tech collaborations right around the AI space that continues to kind of lead this risk rally higher.
Yeah, and we woke up to the Broadcom news and OpenAI overnight, so that really led to some gains there, following all the news already from last week, right? And then I think you had today was the Honhai/Foxconn announcement with NVIDIA, which is separate to the InnoScience announcement alongside NVIDIA as well. And as you can see, that is leading to some gains there on Honhai as well, 0.5%. The Samsung story was the interesting one, because that was, I think if you look at it, the first earnings-supported AI story, although we are short of details there because it was just the prelim numbers, which was a substantial beat. I think initially markets reacted quite helpfully as far as the bull case was concerned, but we have completely reversed the gains now. But all that is to say, this, shares of Samsung have done tremendously well. I think we're close to doubling, in fact, from the bottom of 2024. So there is some money to be taken off the table there. And also to just mention, so apart from tech, the rest of the markets, A versus A. 8 shares are actually in favor of A right now. And the rarest, of course, within this, the market reaction and all I think the first official statement coming through out of the Chinese side.
Since the U.S. administration, the Trump administration did threaten those 100% tariffs
on the weekend,
over the weekend. So certainly it seems like both sides are still trying to bring down a little bit of the temperature as we count down to APEC, which is about 2 or 3 weeks away. So certainly, as we were talking to Zhou, the think tank that is under the Ministry of Commerce, they did mention that they still believe this meeting could still happen in South Korea. So certainly that is one to watch. And we're focusing very closely on that statement itself, too, right? When you take a look at the readout and really what they're saying, right? They're saying that they are going to continue with this trade fight, but there seems to be some nuance that they're still looking for some sort of collaboration still.
Yeah, and it's not just about China and only the U.S.
Yeah.
The sense you get is China's broadening out the message that, fine, the U.S. might feel itself as a target here, but that should not be the case, according to Xiaomi, right? Because this certainly concerns other trading partners as well. And I think if you look at the nuance that they're trying to hit specifically with that message, is that export curbs do not actually mean an export ban. Specific. I think they're trying to work out the details of how they plan to implement this moving forward beyond their borders.
And just look at the trade data, they say as well, from September, right? When it came to imports, it was a massive blowout in expectations because you started to see that China is continue to do business in a really robust way with a lot of American allies, right? You take a look at when it comes to Japan, I think it was up some 20%, Taiwan, South Korea, all recorded very strong boost in exports, imports, I should say. But exports as well from China was also actually looking pretty good. So does that mean China is kind of moving up the value chain as well when it comes to chips too? And
disproving, I think the point there was disproving the notion that it was an unreliable trading partner.
Yeah.
That it was out there to disrupt the supply chains. And I think the response,
collateral damage,
the collateral damage side of things, and the response earlier from Xiaomi was, you simply have to look at the data to simply understand that that's not the case as it pertains to that as well. So all indications are we are headed towards a meeting between the two presidents. There are some sticking points still, but I think from a market's perspective, it was a reminder on the weekend that a gap still does exist, but the gap isn't as wide as the headline suggested in Asia Pacific. We woke up on Saturday and we were like, what's going on? Let's bring in Mark Cranfield with us right now, out of our MLive team. He's out of Tokyo today. Mark, good morning. Let's talk about how you're enjoying the weak Japanese currency in a moment. But yes, help us understand now what the market understanding is of trade tensions, for example. It doesn't seem we're in a really bad situation.
I think investors have been used to the idea for some time that China's playing a long game as far as the trade situation goes with the United States. They haven't really deviated very much from that. It's just that from time to time they need to remind America that they are not going to be making knee-jerk decisions, and investors are generally used to that idea. So they also, when traders look at the Chinese markets, they also know that in the very short term, China probably has more tools to help its equity market in many ways than the United States does. So when they need to, they can ask for government-related funds to come in and help to support the market. They're in a much stronger position anyway because they were lightening up during the rally over recent weeks as well. So they're in a strong position to come in as and when needed to support the Chinese equity markets. And if you look at it overall, China's response to these things is relatively transparent. They make it fairly clear what they want, where they're going, which is in contrast to what investors have to deal with, these coming and going decisions from the United States. They seem to be changing their policy on the hoof. And no one's really quite sure where they're heading. And as you say, from within the space of 24 hours, you can have huge changes. On Friday night, it looks as though President Trump was being very aggressive, slapping on big tariffs, and then within 24 hours, things have eased back a lot, and he's not taking the same stance. And you can see the volatility that creates in the S&P and the US equity markets. So it doesn't mean to say it's going to be a smooth ride by any means. People have to get used to the fact that both sides have got their agenda. There'll be a lot more to be said. There could or may not be a meeting at the APEC between the two presidents. But in the meantime, people will have to look under the hood and see what does it really mean from an investment point of view. And when the dust settles, you'll probably see that you can make a clearer case for being in the Chinese markets than you can for the US, because the Chinese side is less prone to suddenly changing direction. I think investors have a clearer sense of where China is heading than the United States.
Mark, it seems like what could be still supporting this market still is AI, right? I take a look at what happened with Broadcom, another blockbuster deal from OpenAI. And then you add, Shanghai, NVIDIA, InnoScience with NVIDIA as well to build more of this infrastructure. For one thing, I'm questioning how OpenAI is paying for all this, but then, is it a reason, again, to actually buy into this sort of AI story, or does it just fan some of these more AI bubble fears now?
Yeah, some questions you shouldn't ask. You shouldn't be asked who's paying for this thing.
You don't want the answer to that.
That's my job, Mark. I got to ask.
That's correct. I forgot. Okay. Where we were.
You should just be closing your eyes and having faith that everything will work out nicely in the end and that everybody will make loads of money. I mean, it all comes down to the outlook that we hear from the CEOs and the CIOs when they give their report. So this week we're expecting to have TSMC this week. The situation currently looks very promising. We've had Honhai, we've had Samsung. Everybody is giving very good indications that there is demand for the AI infrastructure and that there's still money to be made from there. If we get an endorsement from TSMC this week, again, it will be reassuring that the companies are going in the right direction. Of course, it will set us up for the really big one, which is NVIDIA next month. At some stage, as with most cycles, there will be a degree of overinvestment, and somebody will have to pay for that. And in the end, there'll probably be investors who came in too late, and they'll regret joining it. But it could be a long way off. As we saw during previous bubbles, they can extend for a long time. You might think you're in a bubble, but it can be a long time before it bursts. And if you're a fund manager looking at your returns for the next few months, particularly towards the end of the year, if you give up now, you could be letting a lot of P&L slip away if the markets continue to rally into the end of the year. So that's the judgment that people have to make. But it is very important what the company leaders have to say on the outlook for demand, more so than the earnings itself. People expect decent earnings this quarter. That's almost a given. But what are they going to say about the outlook for 2026? And that's what will drive the next leg of the market, whether it's higher or lower.
Mark, can I just ask you quickly on Japan? It seems like we're dealing with tail risks in markets right now. So, well, we're reminded of the tail risk, right? So I think you brought up one just now where, what if President Xi and President Trump did not meet? Did not meeting. That's a tail risk that markets should consider. The other one that's suddenly come up is, what if the next Japanese prime minister comes from the opposition? How do I need to be thinking about the fluidity in the political scene there in Japan right now?
Yeah, that's another question you shouldn't ask, David. It's a very big risk for Japanese assets. It's something they've never really had to deal with. Anybody who's investing in Japan at the moment in their lifetime, they would never have had to face this question of somebody from outside the LDB potentially becoming the leader of the country. There's a meeting going on today between the DPP, which is the largest opposition party, and other small parties, and they may come up with a plan to offer an alternative prime minister to Ms. Takeshi, who so far is failing because of the fallout with coalition members last week. It is no longer a small risk for Japanese markets. It's becoming a bigger risk. In this vacuum, everything is up for grabs. And certainly, in the very near term, it doesn't reflect well on the Japanese currency. The safety valve for most international investors is probably to remain short biased against the Japanese yen, because there is not too much that the Japanese authorities can do about it in the near term. When you have such a fluid political situation, the Bank of Japan is in no position to raise interest rates. So it's extremely unlikely they can now go ahead with a rate hike in October. The political mess just doesn't support that view. Then you've got the Ministry of Finance, who is responsible for deciding when you can come in to support the Japanese currency. Right now, it probably hasn't moved enough for them to think that the alarm bells are going off and they need to step in straight away. But that will be in the back of their mind. Maybe if we reach 155 to 160 on dollar yen, they'll start to talk more aggressively and the market will need to be prepared. In the meantime, unless we have a lot of clarity, which the Japanese investors are looking for political coherence, they're looking for clear decision making. Where are the next steps? How is the government going to be formed? What is the fiscal policy going to be? None of that looks very easy right now, and the yen will be the weak link in all of that.
Mark, always willing to answer all our tough questions.
Thank you.
Thank you. Mark Cranfield, our line strategist, joining us Tokyo this morning. Coming up, how Chinese beauty brands, talking about sea beauty, are winning over global consumers. We're going to cross over to our China correspondent, Min Lo. She's live in Hangzhou for us, where one of those companies is based. Min.
Hey Yvonne, I'm here in Hangzhou at the headquarters of Florasis, the Chinese beauty brand that is a top-selling cosmetics brand on Douyin for the last 4 years, and it's a brand known for its Chinese aesthetics. You can see here some of its products. Chinese traditional painting-inspired carvings on some of its palettes. Each compact is like a porcelain canvas, and even some of these lipsticks as well. A little surprised when you open it up. I'm not sure if the camera can capture the details, but there are really intricate carvings on the lipsticks as well. Some say this is not just makeup, it is wearable art. And joining me later to talk about Chinese beauty trends and consumption patterns is Gabby Chen, Head of Global Markets at Florasis. That interview is next. This is Bloomberg.
Welcome back. You're watching The China Show. We're about 45 minutes into the cash market session this Tuesday. A look at some data. Why not? Why not? Bloomberg Intelligence says ETF launches shattered monthly and annual records in September. A total of 117 exchange-traded funds were introduced last month, sending the 2025 total soaring already above last year's record and potentially on track for 1,000 new products this year. Eric Balachunas, our BI senior ETF analyst, has graced us with his presence. He's crossed the Pacific. He's braving jet lag for us this morning. It's nice to see you, Eric.
Thank you. You're right. I still have a little jet lag, so, but I'm getting better. Every day gets a little better.
Yeah, there we go. With the passage of time, as they say. So what's cooking in your kitchen?
Yeah, look, 20 years ago, when I was in Bloomberg Data, I was handed ETFs, and I kicked the tires on them, and I'm like, these are going to be really big. It felt like somebody discovering the MP3, right? This is going to change music. And I became obsessed with ETFs and became the expert internally. We've grown a research group, and they have really exploded. I nailed the call, luckily. Anyway, this year, they're going to break records in launches and flows and volume. And the launches are, I think, incredibly important, sometimes underrated. Flows gets all the attention. But the launches, 1,000 ETFs will launch in the U.S., and about triple that globally. In those launches are people like Tom Lee, companies like Capital Group, and then some really radical, crazy stuff like 2X MicroStrategy. So there's something for everybody. Basically, the whole financial system is having to sort of squeeze through the ETF crucible now, because this is where the fish are biting. So if you want to make it and you have a strategy, you kind of need to be in the ETF marketplace now.
Tell me how flows are looking right now when everything is up almost.
Yeah, well, flows, it helps when everything's up, no doubt. So we're going to see 1.3 trillion in U.S. ETF flows. The record last year was 1.1 trillion, and before that it was like 800. So every year seems to set a new record. That's good. If the market were down, I bet flows would be like 800 billion. Like, they still take in money. Like 2022, when everything was down, ETFs took in 650 billion in the U.S. I always said that's a good sign. I always said bull markets are good for ETFs, but bear markets are even better for two reasons. If we see a bear market, volume in ETFs goes through the roof. People love to trade them, lean on them, tweak their portfolios using ETFs, especially institutions. So volume in those, it tends to get bigger investors using them, and that usually leads to flows and new adopters. The other reason is in a bear market, active tends to struggle. And a lot of people will be like, oh, the heck with this, I'm going to go with a cheap beta ETF. So we find in bear markets, the actual, percentage increase of both flows and users goes up. But in a bull market, you tend to have bigger numbers just because everybody's buying everything, whether it's Bitcoin and gold or just equity beta or active. Basically, there's 4,500 ETFs in the U.S. and over 3,000 have taken in money. So for the other 1,500, they have issues. But because if you're not catching fish now, you have problems.
Well, the concept of active ETFs is starting but slowly gaining traction in the Asia Pacific. So overlay what's happening in the U.S. and where we might see the industry here in the Asia Pacific in a couple of years' time, if not quicker. Yeah,
if you're an active manager and you're like, how can I evolve into this new world? I would think of two words, cheap or shiny, right? You can no longer charge 1% to 2% for basically equity beta. Because beta is free now. That is an inconvenient truth that everybody has to deal with. So in the U.S., what they're doing is like, okay, if beta is free, I'm just going to charge you for the active. So I'll be real high active share like ARK. I can charge 80 to 100 basis points because I'll be using smaller doses. But if I'm low active share like DFA or Capital Group, I got to lower my fee because people can get most of those stocks for free. So just charge people for the actual active and not the beta. So we call it beta adjusting your fees. On the flip side, do legwork for people. JEPI's a good example. That's the JP Morgan covered call ETF. They're writing call options to give you a little extra yield. So it's like a trade that's embedded in this active strategy, and people like that. So legwork, putting in a novel idea into an ETF, and the final way is to just go wild and do 2x, 3x leverage. I know in Asia I call them degens in the U.S., but you guys have degens here too, apparently.
Well, the Gen Zs, you mean? No, okay, that's not completed, but yes.
And those are technically active too, and they're selling like hotcakes. They're a smaller percentage of assets, but they're a bigger percentage of volume. So the exchange is really like these leverage ETFs and crypto and stuff like that. So really, that's what I would think about is one of those pathways forward is how active can make it. But that sort of old guard, I'm gonna have a mutual fund and mostly hold S&P stocks and tweak around the edges and charge 1%. That's the endangered species.
Also, when it comes to, you're here in Hong Kong, you're heading to China next, right? Interesting milestone, really, with China now surpassing Japan as the big ETF market in Asia. There's a new king in town, I'm wondering. Given the explosive growth, what do you see as really the momentum behind this, and how does it change preferences in terms of what investors are looking for?
2 words: national team, who I've gotten acquainted with. They're not messing around, right? They're buying ETFs just like Bank of Japan did. We used to have this running joke when people would come on the ETF set, on ETF IQ, which is a show we do in the US, and I'd be like, BlackRock is the second biggest buyer of ETFs. Merrill is the third. And I'd say, can you guess the first? Nobody could ever get it. You guys will get it, though. Bank of Japan. They were the biggest buyer of ETFs across the world. Now, China's moving up the ranks. They may be 4th already because they move fast. And Bank of Japan's going to start selling their ETFs. So that has really helped the China market pass the Japan market in assets. When the central banks get going, you got to basically watch that. And they buy a lot, right? So China also has other organic buyers. But when the government gets involved, that's going to help the cause for sure. And with Bank of Japan kind of flatlining and now even selling, that should really, China should be the leader for quite a while.
Is there such a thing as too many ETFs, too many issuers? What does that mean for? Because you mentioned 1,000 ETFs in the U.S., triple that outside. So what is the misconception around competition?
So there was a big article on Bloomberg like 3 weeks ago that there's more ETFs than stocks, and like everybody freaked out. And I'm like, you do know there's more words than letters too, right? Right? There's more songs than notes. Like this is there's more recipes than ingredients. This is normal. Most of those are going to live in oblivion, right? Only like a couple will be monsters that really can move the underlying market of the stuff they hold. Like a Vanguard 500, when they see flows, they definitely have to buy those stocks in big amounts. Most of them won't have that much effect. There'll be a lot of spaghetti at the wall. Some will stick, some won't. But yeah, there's going to be some market structure shifting here. The problem with the launches is paradox of choice. If you ever go into a restaurant and there's like too many choices.
Oh, it's a bad restaurant.
Yes. It's good job security for me though, because
keeps you busy.
we navigate people through all of these choices. So in a way it's good, but in a way it's kind of bad for the consumer. But the competition you can't argue with because it's lowering fees, creating more interesting, innovative products, and forcing the issuers to up their game.
Gives you more reason to come here too, Eric. Thank you. Eric Balchunas, great to have you in town. Bloomberg Intelligence senior ETF analyst joining us here in Hong Kong. We got plenty more ahead. This is Bloomberg. Some stories that we're tracking for you this morning. The Dutch government has seized control of Chinese-owned chipmaker Nexperia, invoking a Cold War-era law for the first time. Officials cited serious governance shortcomings at the firm that they say threaten key technological know-how. The move, targeting a unit of China's wing tech technology, is expected to escalate trade tensions with Beijing. China's Ministry of Transport says it's exempting Chinese-made vessels from new port fees on U.S. ships. The fees are due to take effect on Tuesday. Now, Jeffrey says oil tankers and container ships will be among the hardest hit. Beijing announced the levies last Friday as retaliation for a U.S. plan for similar charges on Chinese vessels. An Indian trade delegation is set to visit the U.S. this week as the two nations work towards finalizing a deal. An official told reporters that New Delhi is also seeking to purchase more natural gas from the U.S. as part of trade talks. Negotiations resumed last month after President Trump imposed 50% tariffs on Indian imports, the highest rate in Asia.
All right, we're looking at rare earths, and while you look at this, just to also mention, we've gotten the response coming out of the Chinese Chip Association on that story that Yvonne just went through there on Nexperia. Effectively what they're saying, they're criticizing the Dutch government's intervention targeting the company as selective and discriminatory under the guise of national security, according to that statement. Right, but speaking of statement, the Ministry of Commerce in the last 90 minutes or so has come out with their statement, official one, response to the commentary that's come through over the weekend, defending the export controls, that these are not export curbs, and there's a difference between the two. But yes, certainly it's playing out across these markets, particularly when you look at some of these names outside China. It does indicate, though, we are working towards a conversation between the two presidents in about 2 weeks.
.29 a.m. in Tokyo. Of course, Japanese markets reopening here today, so it is a bit of a catch-down story here today, and really kind of bucking the trend where the rest of the region is seeing a bit of recovery. We are seeing stocks down about 1% in the Nikkei 225. Same goes for the topics here, and still some weakness when it comes to dollar-yen. We're at 152 levels for the yen here this morning. Of course, still tracking a lot of the politics premium and really what we've been seeing with the opposition. So a lot of talk there domestically, but we've been kind of overshadowed by a lot of tariffs and the like really recently in the news.
Would have been the top story were it not for the flare-up, of course, over the weekend, right? Because as Mark Cranfield did point out, the tail risk of someone from the opposition perhaps becoming the face of political Japan is no longer as far-fetched an idea, given what's been taking place. That's still, of course, tail risk, but of course, just something to consider. 1.4% as we catch down there in Japan, which is, by the way, because of the drag we're getting out of Japan, we're not doing as well on a benchmark basis because of the catch down there, but also that's just to say Taiwan is the offset when you look at IT and that market there up 0.6% as a group on the sector itself. S&P futures are catching a bid. The dollar is still on balance, unchanged, but the 12.15 is still on the stronger side of the recent range here as well. But yeah, apart from that, volumes are on the lighter side of things. So while we are recovering somewhat as far as sentiment, we haven't fully, of course, recouped all the declines, of course, from Friday on most metrics here.
Yeah. Okay. Certainly, we're seeing how things play out here, and let's move the discussion around and talk a little more about makeup.
Yeah, I don't need that, but yeah.
You do. In fact, if people don't know, David does do makeup every day to be on TV.
I know I look perfect. Yeah. That's artificial.
Don't ruin the fantasy. Let's talk about Florasis. It's a Chinese beauty brand that has been gaining a stronger foothold in markets outside its home country. It really has been expanding its physical presence, having set up in Paris and Tokyo. And the brand is also aiming for growth in the U.S. market, and it recently has really gone viral. Our China correspondent Min Lo is standing by Hangzhou with Gabby Chen, the president of Florasis Global Markets. Min, take it away.
Thanks, Yvonne. Yes, Florasis is a top-selling brand on Douyin for the last 4 years. And as you said, joining me here is the head of global markets, Gabby Chen. Thank you for joining us. I want to start with your foray into international markets first, because you have this permanent beauty counter in Paris. You have a flagship store in Tokyo this year. Where are you seeing the biggest growth internationally? And what is your target in terms of your share of overseas sale in, say, 3 years' time?
I think luckily till this year, we're seeing double-digit growth for over the global market. Japan has remained growing very strong for us. Japan, first of all, is going to be our top market. Secondly, we shifted our strategy to Southeast Asia starting from 2025. And the third will be European markets. So you can see that our global footprint is being growing bigger and bigger.
Okay, earlier your colleague was telling me that your products are actually extremely popular in the US. In fact, the highest popularity is in the US in terms of engagement in social media. But the GMV sales actually not as good in the US compared to Asia. Why is that, do you think?
I wouldn't say that's a fair comment because up till last year's, I think there's a huge political change for the global market. So we shifted our strategy from the US market to the Southeast Asia. But prior to that, US has remained very strong as our top one global market. You can see that we have 1.2 million followers on our TikTok official account. We actually work with 1,500 influencers in the US market per year. So overall, US has always been a very important market for us.
So what is your expansion plan now in terms of which markets you are prioritizing? Does this mean that you are not looking to invest further in the US then?
We are luckily still remain growingly stable in the US market, but as you can see that the global market has been shifted. So we are on holding the investment, but we are remaining our brand performance in the US market. But as I previously shared, Japan, Southeast Asia, and Europe has growing very strong.
Okay, do you have any timeline in mind in terms of when you might want to invest more in creating more offline presence in the US in particular?
It has always been our pipeline, and we hope that within 3 years you will see us in retail in the US.
Okay. The beauty sector has been traditionally very dominated by European brands like Estee Lauder, L'Oreal. South Korean brands has also been very popular in Asia. What is the competitive edge that you bring?
I think beauty today is now no longer a single-dimensional standard. People are looking for something they can resonate with. Florists bring that uniqueness on the global market. First of all, we're deeply rooted in our Asian culture and also our Oriental wisdom. So, for example, for our skincare line, which just launched, it is enhanced with TCM, traditional Chinese medicine. So, bringing that balance of harmony and artistry about Chinese culture. I think that's something unique for florists always trying to tell. We're here for the long-term storytelling and also brand building, not for a short-term gain.
Let's shift over to domestic market because based on the latest data that's been disclosed, it seems like 2021 was the peak of your GMV sales and it came down in 2022 and after that there weren't any public numbers. Are you able to share any insights in terms of what your numbers are looking at, what it's looking like and what does it say about consumption sentiment right now?
I think overall Florasis has been walking into a more healthy growth. In domestic market, we see a healthier cycles is coming in. I think you can see that the China market has gained back the temperature. We just started our Double 11 sales and it's looking really well.
Okay, are you able to share what is the percentage of growth you're looking at?
For domestic market, it's not really my region. I take care of the global market. And for global market, we are facing double-digit growth strongly. And we might be able to finish a double of the sales this year. But domestically, we are going into more healthy cycle.
There has been a lot of competition in the domestic market, the so-called involution. Do you face pressure to provide steeper discounts to attract more customers in China?
That is something we're very proud of. We're very strong at the promotional standard. So for Florasis, we're not here to gain the short-term gains like we just shared. So it's not about price competition. It's about product quality. You can see that if you put in any of our products among of all the other brands, you can see our products stand out because it tells the quality, the story, and its uniqueness. And most importantly, the product ingredients is healthy to your skin. So it's very different from all the other competitors.
And so far, Florasis has been targeting the mass market, but there has been increasingly a crop of Chinese brands that want to put themselves on par with Western brands in terms of quality and pricing. Are you at some point looking to tap into the luxury premium market in China and overseas?
We are indeed working on that, we call Prestige line, but it is something still in the pipeline. But on the global market, I believe that our pricing strategy has already allowed us to compete with some of the international brands. We are indeed in the Prestige price. Like you said, we already opened a flagship store in the Tokyo Ginza 6. It already showed that our brand positioning is being well accepted in the Japan market.
All right, any IPO plans going forward?
I think when the time is right, we're always open, but for now, we don't have any plan yet.
I think what's very interesting is that your company, like the new crop of Chinese companies, you were exclusively online for many years, and you just moved into offline physical stores a couple of years ago. Is this the same sort of strategy you're taking when you break into global markets? Are you still going to be leaning heavily on live streaming and online presence first before investing in a brick and mortar store?
I think due to the social media getting so popular, it has changed the global, we say the game. Change the global game about how the brand to go global. Yes, indeed, we will go for e-commerce first when we're starting a new market, but retail has become more and more important for a brand like us. Because we represented the culture, heritage, it needed to have an arena to show, a venue to show to the consumer how good is our product, to tell the story. So to answer your questions, like for global market, we in fact put in heavily investment on the retail. So that's why the Japan Kinza 6 flagship store and the Paris counter is one of the key milestones for us, and it's not going to be the only one. You're going to see us everywhere in the next 3 years on the global market, especially in the retail presence.
All right, so we'll see more physical stores of Florasis in different countries, including Malaysia, also in the pipeline. Back to you in the studio, Yvonne.
Yeah, okay, Min, so next time you're in Malaysia, you're going to have to pick up some for me. Min, thank you so much. Yeah, need all the help I can get here. For Bloomberg subscribers, you can rewatch that specific interview or others that you might have missed. Your TV Go on your Bloomberg terminal. You can be part of the conversation, send messages on our shows. Yvonne really knows how to pick her spot here. Check it out, TV Go. This is The China Show. Right, welcome back. We're looking at Bitcoin staging halfway back. Modest recovery. Certainly, it feels like long ago we were touching 125,000 on Bitcoin itself. We did see a rush, of course, out of leverage bets, left parts of the market really incapacitated. An index tracking altcoins, sort of smaller, highly speculative tokens that rely on fairly fragile liquidity, actually tumbled 40% within minutes of course, what happened on Friday. President Trump threatening additional 100% tariffs on Chinese imports. Let's bring in our cryptocurrency reporter, Shivashri Ghosh, with us to have a closer look at what happened. And now we're about a few days divorced from that massive drop that we had going into the weekend. Do we have a better understanding what really happened there?
Hi, David. Indeed, we have some kind of post-mortem from what happened on the flash crash. Basically, there were three key things that really triggered this. First was the excessive leverage that was built across the market from Bitcoin to the smaller coins called altcoins. Second was the automated circuit breakers, the automated margin calls that got triggered, and that without human intervention on a very thin liquidity market over the weekend. And the third was a very crucial reason was that the absence of regulated central counterparty, which typically in crypto normal world, is seen as a resilience, is seen as a strength. But ironically, on days of this kind of crashes, they come out to be the biggest weakness. So these are the three key reasons we've seen, on a very big picture basis that we can say was the reason of the flash crash we saw on the weekend.
What can we learn from this, Shivashri? I mean, obviously, it seems like Bitcoin at least has made up some of the losses, but I think for some of these altcoins, for example, there's a lot of still lingering questions on what comes next. Does this put more doubt into some of these sort of altcoins now?
Indeed, you're right, Yvonne. Basically, a lot of froth, a lot of excessive. We have seen like 10x to 100x leverage building up on the altcoin sector. And as we know that, typically whenever there is a big, massive unraveling, a big sell-off happens, altcoins suffer the most because the liquidity is very thin on these altcoins, right? And especially, as you rightly mentioned, that now that we have seen the biggest sell-off on the altcoins, the way back will also be slow. because the liquidity is slow, they're fragmented, and concern, and then the sentiment is nervous as well. And we have to remember that this time around, the bull run that we were seeing on the cryptocurrency market from 2022, end of 2022, was actually led by Bitcoin and less by altcoin. Typically what happens is when a bull run picks up, the altcoins also pick up, after the Bitcoin. But this time it wasn't the case. And that is the reason that we've seen this massive sell-off, because there was a lot of panic in the smaller altcoins. There is a lot of some categories of the altcoins also, like in the top 50, and then there is others, the meme coins and the very less liquid tokens. That got sold off, in a big way. So that could also take time to, that could be another reason that the market will take time to bounce back in a convincing manner.
Right. I mean, I was going to ask you about that. Let's toss this forward. Does a sustainable recovery now look to be somewhat in place after that big unwind, or what are you hearing from your contacts?
So basically what the traders are saying, David, is that the biggest known unknown is, again, the trade talks, right? The US-China trade talks, the geopolitical risks. That actually triggered the flash crash over the weekend as well, because it happened when the markets more or less were closed in the US, and the crypto was the only one that took the blow. Going ahead as well, we see that to be the case, where geopolitical risks will continue to be the biggest factor that will determine how crypto will shape. Of course, the froth is out. 1.6 million traders were liquidated. Nearly $20 billion worth of positions were liquidated as well. So a lot of the froth is out. Still, confidence is slightly, shaky. As we have seen today, that some bit of weakness has crept into the market as we speak, though there was some recovery yesterday. So overall, it's a mixed, situation sentiment-wise, not really all the way confident going ahead.
Subhashri, thank you. Subhashri Ghosh there, our cryptocurrency reporter joining us out of Singapore. Tell us a bit more about what happened. Of course, pretty tumultuous sort of roller coaster when it comes to crypto markets the last few days. Let's talk about India, right? The IPO market there is certainly looking pretty hot now. Yesterday, we had Tata Capital. That was the biggest IPO of the year. That actually fizzled out on Monday. So after that, we're looking ahead, right? Companies planning to go public are pinning their hopes on today's debut of LG Electronics India to rekindle excitement. Let's bring in CJ Chakraborty there, joining us from Mumbai. CJ, so yesterday was a bit of a bit of a dud, I guess you could say, when it comes to Tata Capital. But when it comes to LG Electronics, there seems to be a lot of excitement. Tell us a bit more, and how are things going to look today?
Yeah, I mean, it seems like after yesterday's sort of muted, debut for Tata Capital, the biggest IPO of the year, Diwali probably will come early this time around with LG India's listing, given the fact that we are expecting as much as 25 to 30% sort of a listing day pop. If you go by what grey markets are indicating, it was one of the most subscribed $1 billion plus IPOs in recent history in India, and demand was quite strong, both from local as well as foreign investors. And therefore, I think we can look forward to a very strong, listing day gains for the stock.
Yeah, and what was the big difference, though, obviously apart from the play itself between the two listings? It seems night and day, really, between what happened yesterday and what we're likely, to your point, what we're likely going to see in about an hour's time.
I think the biggest difference was in the pricing itself. LG probably strategically priced itself to a discount compared to its peers and what others in the market expected it to be, given the fact that traditionally consumer-oriented companies in India have attracted very rich or very high valuations, or at least in terms of price to earnings. And Tata Capital, on the other hand, seemed to be quite priced fully to its potential earnings. The other factor could be also the sectors that they both come from. Tata Capital comes from probably a bit more boring shadow lending, financial sector, whereas LG India is a more of a consumer-oriented story, especially on the back of all the tax cuts and incentives that the government has been been giving to consumers to spend more, given the fact that India's economy has been slowing down for more than 3 to 4 quarters now. And therefore, I think investors at this point of time are expecting a rebound in consumption, and this is reflecting in the demand that we saw for LG India's IPO.
Yeah, I mean, it could be larger in terms of value, looking at the early pricing than its parent. CJ, thank you so much. See Great Chakraborty there in Mumbai for us. And just looking at Nifty futures going into that open today, yeah, so that's going to be only one story in town as we look ahead to the open over in India. Plenty more ahead. This is Bloomberg.
Some people think that China do not want to export our rare earth products, and I don't think that is the truth, because we still are, encouraging the companies to follow the market rules and trying to do the businesses with other trading partners. I know that China's rare earth industry is very strong, but it's not only because our domestic market. We depend a lot on the global market, but the global market is based on some rules and certainty. So if we are continue to support the government, the government to support the enterprises in different ways to trying to give them more confidence, I think that the supply chains can be strengthened.
That was Zhou, the senior researcher who joined us in shows earlier on out of the Chinese Academy of International Trade and Economic Cooperation, of course, a think tank under the China's Ministry of Commerce there. Speaking of rare earths, really the initial clarity coming through out of the Chinese side of things, the official statement coming through following that massive resurgence in attention on the weekend as far as rare earths go. As far as the equity markets go, that's continuing to move up to the upside here on the back of the standoff still. And there is hope, hopefully, that the misunderstandings between both sides are ironed out ahead of, hopefully, what will be more fruitful and constructive talks along those lines here.
Yeah, we're also watching Wingtech shares. Yeah. This is the Chinese company dropping by, I think it was like 10% daily limit for a second day after what we heard from the Dutch government and the seizure of its Nexperia unit, right? So it was seized using that emergency Cold War era law for the first time. So that move could aggravate, of course, trade tensions between the EU as well as with Beijing here. And there you go. We're still seeing that in the stock here, the pain. And you take a look at the solar stocks is also one thing to watch as well. There's a report on tighter capacity control. Maybe that's why we're seeing them rally quite a bit here. Trina Solar, for example, is up close to 10%. And you got to talk about Mart. Seeing a pop today.
Yeah, massive.
Thanks to Tim Cook. He's in Shanghai and he visited the store. I think there's an anniversary going on there as well.
Yeah, in fact, I think so this is really interesting. It's one of the better performers across these markets today, and I think with how this is really being covered there as far as mainland China is concerned. So I think he visited a Mart store, I believe it was yesterday. In fact, he even posted about it on his social media. Oh, that's a massive one, though.
And he's actually holding, I think, they made him their very own Tim Cook Labubu.
That's how you know you made it.
And he's even holding like a little iPhone 17. It's the cutest thing ever. So that's a great warm welcome, of course, for the Apple CEO. Met with, of course, the CEO Wang Ning there and the designer behind Labubus, according to this is to the Shanghai Securities News reporting there as well. So, I mean, any reason for the stock, right? But see, the stock, though, it's up today. We're still about 20% off the all-time high that was reached back in August. So there is still a lot of questions around, the rally and
the sustainability, or the lasting power, right? So I think some of the commentary that's come through out of analysts recently on this new consumption trend is it's still going to feature quite prominently, but just the trajectory of what took it to this place and Tim Cook's visiting the store, uncertain over the momentum there.
And what does it mean? Is there going to be collaboration between
iBoo-Boo?
iBoo-Boos?
Yeah. What are you going to call that? It's tiny though. You saw that iPhone?
Phone cases?
Yes.
iPhone? I don't know. Like Labubu. Hanging out of your iPhone? I don't know.
Oh, yeah.
Possibilities are endless.
Well, it's a good thing I don't sport skinny jeans anymore. Otherwise, where's that all going to fit?
Well, bringing back old trends. But yeah, the Monsters is also celebrating their 10-year anniversary. So I think that's why he was there. Yeah.
Okay, there we go. Well, that's almost it from us here. That's it from us here in the China Show. We will see you all tomorrow. There's lots more coming up here on Bloomberg Television. A live look at Shanghai going into the last 30 minutes of trade. Thank you for joining us today. We will see you all on Wednesday.